May 14th, 2026, we're going to go over the major alignment opportunities that occurred today, and let's get into it. The alignment channels form momentum alignment channels, MACs. They form when the momentum of the 30-minute, which is represented by a MACD, when the momentum of the 30-minute and the momentum of the 15-minute are in sync, or if they're doing the same thing, then you go to the 5-minute twins, the 5-minute regular hours and the 5-minute extended hours. And if those two things fall in sync with the 15 and the 30, we are now in an alignment momentum channel, a momentum alignment channel. That's what that is when we have the 30, the 15, the 5 all going the same direction. Then we go to our 1-minute chart to look for our entries. And our entries are designated by the 1-minute MACD. So if our bias is to the upside, we don't want to enter until the momentum flips to the upside, which is here. We don't want to enter until it flips to the upside right here. And that's literally the game. That's the name of the game, and we use a one-to-one strategy. Look at this momentum shifting right here. That's where it shifted. And we just keep playing that game depending on our overall bias. And we don't take trades unless everything is in sync. So the first opportunity, first of all, let's just talk about the price action. So we open up at pre-market low. We literally have a steam train. Look at this, just clear uptrending. Huge buying algorithms, huge buying pressure going on. We penetrate through previous day's high. We come all the way up to the pre-market high. Have a rejection, bounce, come back down to this other critical level, the previous day high. Then we get wedged in between the VWAP and that previous day high. And then what do you see? A final rejection, break above VWAP, and it never comes back. So that is the lesson to learn, is that you always want to listen for the market to tell you a story. Don't feel like you have to enter trades early in the day. You can let it play out and take trades in the middle of the market. You can take it in after the first hour has concluded. Plenty of opportunities will always present themselves. So we're going to get along to the first one now, which happened at... why did I mark this one? I was just marking this because it was a volume confluence. We had a volume confluence. The histogram had not flipped to the upside yet, so technically that wasn't a proper entry, but this was essentially an alignment channel that was forming. The 15-minute hadn't yet crossed over. It was trying to cross over. So this was an early entry opportunity right here. When it finally does tick up, right here, the momentum, when it finally does actually tick up with a huge volume confluence, that actually just doesn't even result in a win, unfortunately, not a one-to-one win at least. If you use the bottom of the candle as the stop loss, that would not be a win. If you tighten it and go a little bit above that bottom of the candle, maybe 75-80% of the candle length, then all of a sudden the one-to-one would win. But we'll call it a loss. That first opportunity of the day, the first trade setup was a loss, one loss. And then we come to this one here. Momentum goes down, flips up. Now, this was almost another loss. We use the base of the candle as our stop loss. That's just the current rule. That's what we do. That's what the strategy is. It's a profitable strategy. Don't want to tweak it if it's not broken, right? That's just the thing. We put the stop loss right at the candle's edge, and it never came back to hit the stop loss. And it finally did come to hit the 1-to-1 ratio. So that was a win. Now notice here, this entry was a little bit more risky because the 5-minute momentum was now dying off. It's not building up, it's kind of dying off. So that's a weak one that you would normally want to skip. You would normally want to skip these sort of situations for the very reason that we want to take trades where the momentum is clear and expanding. But then again, we were in the midst of a 30-minute and 15-minute alignment. Nonetheless, that was risky. I did not take that trade. The next one that occurs is not yet. We want the 5-minute to be expanding, so we're going to wait till that happens. Okay, now it's expanding. Now that 5 minute is expanding. And we get a fat candle bouncing off of VWAP with a volume confluence. Look at that. So that was an opportunity right there as well. A valid opportunity right here, the 1-to-1 clearly being hit. So that's good. Very good, in fact. And that was probably the first official trade of the day because everything is expanding. But the 30 minute is still not in the green yet, so we can't even say it's officially the first real one yet. The 30 needs to be finished in the green for it to be like a full alignment. And that does occur soon. So right here, we get another one. MACD going down, 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 and then it ticks to the upside. This 1-to-1 was a hit. That was also a win. Now, this one that I captured. I traded this one because this was a full alignment. The 30 is in the green. Finally. 15 strong, unbroken. 5 minute data sets are strong. This is a no-brainer. This is where you're supposed to add size. I did not, but I did take the trade, so that's great. I'm going to label this one yellow for full alignment. And then the next one that occurred is right here. Now, this isn't technically a full alignment because the 5 minute is kind of tapering off at this point, but notice the 15, super strong, unbroken. 30 minute, unbroken, very strong. Momentum keeps going, ticks up. That first tick up, that's the one we want. That 1-to-1 was also hit. I'm going to label this orange for almost full alignment, not quite. Now we move to this one. This is a total full alignment. 5 minute tapering up, holding steady and tapering up. Everything else is strong. Beautiful. Absolutely beautiful. I took a few trades today. I took about 6 trades today. I think 5 or 6 trades, and I only had 1 loss. If you're trading a 1-to-1 strategy and you only have 1 loss and you take 6 trades, that, my friends, is it's a potentially profitable day if you don't pick up your trades by exiting too early or interfering with them. Now, here we had the end of a full alignment opportunity. Why? 30 minute strong to the upside, 15 minutes strong to the upside. The 5 minute is now tapering but kind of dwindling. It's kind of losing a little energy. Nonetheless, an alignment is an alignment, going down, 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 ticks up. That right there, my friends, enter at the close of the candle. Stop loss at the very edge of that candle. You target a 1-to-1 ratio, and could have been a win, could have been a loss. We'll call it a win because it did technically hit it had you followed the strict rules of putting your stop loss at the base of the candle, targeting a 1-to-1. But it was so close that it's kind of okay, we're going to do this as purple because it's kind of unclear. We're going to do an orange. No, we're going to keep it purple. It doesn't matter. What am I talking about? Notice what the 5 minute does now. 5 minutes going in the red, which means we can't take any more long positions if we're in the red on the 5. That doesn't make any sense. Nobody in their right mind would do that. At this point, if the 5 is in the red, we want to wait for the 15 minute to cross over to the red. That's what we want to wait for. And look, that happens at 12:30. Let's go to 12:30. Now our 15 is in the red. So we just want to wait for a reset, and we want the 5 minute to be going with this direction. So at this point, when we wait for the 15 to actually cross over, what's happening to the 5? The 5 is now losing its expansion. It's now pulling back. It's recoiling. It's charging. We don't want to take any trades yet. We want the 5 to be going down with the 15 if the 15 is crossed over. 30 minutes still strong, telling us, hey, you shouldn't even take short trades. Just be patient. But the 15 is crossed over, and it's telling you, hey, yeah, you can take short trades. Don't listen to the 30. You know, we got your back. Don't worry about it. That's basically what's going on in my mind. So here we have a massive, look at this channel. This happens every day. Look at this channel, nice, peaceful, calm channel. And then look what happens. A fat waterfall. This right here is so aggressively obvious. So as soon as this price action penetrates the 42 EMA, which is this blue line right here, I mean, that is an entry. I didn't take it, but I really wanted to. I really, really wanted to. But either way, we're just going over basic concepts with regards to alignments right now. The 15 in the red, 5 minute is now weak and in the red. That's what we're looking for. Now we're waiting for a reset to happen on 1 minute chart. Look, going up. We kind of tick down right here. Let's see what happens at 1317. It's 117 otherwise known as. Right here. Nope. Would that have been a win? That would have been a win. Look. If we would have shorted this candle right here at 317 when it ticks down, the price action never came up to hit the stop loss, and then it continued down to hit the 1-to-1 profit. So this was a win. Absolutely wonderful win. There's a few other setups, but all you want to do is look for the momentum to pull back and then fall. Pull back and then fall. You want to be looking for those opportunities while the 5 minute is in alignment with the higher time frames. And those dynamic alignments occur all day. Before we close today, that's all the alignments and trade opportunities I want to talk about. Before we close that, I just want you to look at how the price action, look with me just for a second. Let's just look together at how the price action played with these levels, these critical levels of interest, okay? So one more time. This red is the pre-market high. This pink is the previous day's high. This blue is the pre-market low. Our previous day's low is so far down here, it's not even in the picture. So here's a low, here's yesterday's high, here's pre-market high, okay? Ready? Now we're going to look at the price action for today and just focus on these lines. Just focus on these lines. And let's see if we can notice anything interesting, okay? Market's about to open right now. Ready? Go. Market opens. We penetrate through previous day's high. We come all the way up to pre-market high. We come back down to VWAP. We come back down to the 200 EMA, and we come back down to previous day's high. And we have an aggressive response. Look at this fat candle in response. We come back up. We come back down to that same level, previous day's high. Now what are you expecting? Forget that you know anything. What are you expecting? You're probably expecting, wow, this might bounce again off of this critical level, because look at this strong response right here that just happened. And then sure enough, it does bounce up. Holds above VWAP. Continues on. Notice how this pre-market high, notice how the price action consolidated around it right here. Look at this. It really is beautiful when you see it repeatedly every day. And then we hovered up here in the clouds for a little bit until inevitably breaking the 200. Look, we break the 200 at approximately 12:15, 12:10. Come down, we touch VWAP and we break VWAP. We come back up to VWAP, come back up to VWAP again, stuck in between the 42 and the 200 and this previous critical level, this critical pre-market high. Look what's happening. Look, what do you think is going to happen next? A nice retraction back down. See that? These levels are like magnets. There's like forces of magnetism going on. Look at it being wedged in between VWAP and this critical level. Look at it come back and bounce perfectly on it. Bounce, bounce, bounce again. So it's important to look at how the price action plays around with these critical levels, because they do mean a lot. And with all that being said, I will see you in the next one. Take care now.